Hi, Jim Romer with your exclusive bar chart report to all my farmer friends around the world, grain farmers, cotton, cocoa producers, and coffee and natural gas traders. Welcome to Weather Wealth. And we're going to be talking today about the upcoming USDA crop report this Tuesday. Also, how we predicted some areas certainly seeing drought easing rains this summer in the corn and soybean growing areas, and also what's going on right now with the dollar and the Chinese economy. So, a lot of commodities right now have been hurt over the last few days because of concerns about a Chinese slowdown. The Chinese yuan has collapsed relative to the dollar because of the economic problems in China, a huge collapse in the housing market there recently. And you see the dollar's actually taken out resistance. Look at that fellow, kind of looks like me. That's our first president, actually, George Washington, if you didn't notice. Anyway, so this has affected some commodities, including grain prices. Wheat prices have seen a major break of 15-20% with huge Russian exports over the last month or two, the stronger dollar. That's also hurting some of the corn and soybean prices as well. But in addition, we are seeing that for the most part, the Midwest, this is since mid-June, over 70% of the Corn Belt had relatively decent rainfall. You see in white, pretty much a normal summer, except for parts of Northeast Iowa, Wisconsin, and Minnesota. So that was something I kind of predicted back in June, that the drought would ease over parts of the Corn Belt. And as a result, we are seeing generally trendline yields for corn and beans, and the bean and corn market has built in a lot of this bullishness from early on this summer. Here is FC Stone's estimates for next Tuesday, roughly about 175 bushels for corn, 50.1 bushels for soybeans. Allendale is lower than that, actually below trend line, 171.5 for corn, 49.5 for soybeans. But given that we have all these improved hybrids over the last number of years and often on decent rains over the Corn Belt, we're still relatively around trend line. Not a great shot to the grain market right now. And we'll talk about South American weather. That will be very, very important. So why has the market in corn and beans not exploded here the last 2 weeks, given this drier than normal weather? Look at this, the last 2 weeks, up to 3 to 5 inches below normal rainfall in the heart of the Corn Belt, the second half of August. Well, part of the reason is seasonality. If you look here, this is what soybean prices have done going into the harvest, ahead of the harvest from mid-September through really October. Prices have gone down 13 of the last 15 years, and that with a stronger dollar and higher prices right now and Chinese import worries has kept beans from making new highs, even with the second half of August being drier than normal. Look at this, 2011, 2012, if you were to sort soybeans in September into early October, you actually made money. So we could get a potential bullish USDA crop report on Tuesday, but I doubt we're going to see prices go sharply higher for a long period of time, unless we get into a wet harvest or an early frost, which does not look likely to me right now. How about the winter, the South American summer? This is just strong El Ninos. And in my Weather Wealth newsletter, that's published twice a week for traders and farmers all over the world, you have access to this software and trading strategies. And I look at other teleconnections, not just El Nino, but for the point of we're discussing today, we're looking strictly at strong El Ninos that will be forming here over the next couple months. We already have a weak to moderate one. Look at the November through January rainfall trends. A big return of rainfall already starting the last couple of weeks should mean a really huge South American crop for Argentina corn and soybeans, mixed for soybeans in Brazil. About half these years have reduced crops and about half have big crops. What will happen? How do you use Arctic sea ice, other teleconnections to predict weather for South America, not just Argentina, but Brazil, corn and soybeans? Because we have big crops in Brazil as well this winter, their summer. Then we're going to see bean and corn prices sell off at least 10 to 15%, maybe more by next January and February. So how do you trade this stuff once again? And what's our longer range outlook? We invite you to a 2-week free trial period to Weather Wealth at my website. We would love to help all of you. We've been doing this for 35 years, have farmers and traders in multiple countries. One trade alone could pay for the service for 2 or 3 years. From coffee to cotton, grains, and natural gas, that's what we help farmers and traders with. Welcome to Weather Wealth. Have a great weekend. Enjoy. Thank you.